Markets took a wild ride this week, with the S&P 500 breaking key support and volatility spiking. The associated selling pressure exceeded early March levels. Thus, the low-rally retest bottoming sequence coupled with breadth thrusts begins anew. Let's unpack what's happening, what the charts are telling us, and what to watch next. Charts don't drive markets, conditions do. Charts just reflect and often anticipate those shifts. We've seen 3 advanced decline line non-confirmations since December 2024, warning of weakness. The S&P 500 just hit a rough patch. After breaching twin support lows at 5,500 to 5,488, levels we flagged last week, a cascade of selling kicked in, outpacing early March's downward selling pressure. On April 7th, the index dropped to an intraday low of 4835. Monday's chaos included rumor-driven swings. The Dow fell over 1,700 points at the open, spiked up nearly 900 on tariff rumors, then closed down 349 after denials. Volatility is in full swing, and we expect it to stick around. This reset the clock on a potential bottoming process. More on that shortly. Here's some context from 314 Research. Non-recessionary corrections typically see 15 to 17% drawdowns. From the S&P 500's 6144 high, that's 5222 to 5100. We've blown past that. Recessionary bear markets average 25 to 27% drops. 6144 minus 25 to 27% is 4608 to 4500. Monday's 4835 low is awfully close to that recessionary range. Let's look at the weekly chart. The April 7th low of 4835 landed near long-term support and the rising 200-week moving average, key levels we highlighted recently. It's also close to the 50% retracement of the 2022 to 2025 rally, around 4800. Markets can overshoot, but this decline is getting long in the tooth. Without a recession, our models aren't signaling one yet. It's extended beyond the norm. We are not saying that a bottom has been established, more details below. We are saying that the current decline is long in tooth. A sharp countertrend rally could be brewing. In a downtrend, resistance matters more than support. It's where selling pressure shows its hand. For the S&P 500, watch 5292 to 5390, a gap, then 5500 to 5701, another gap, followed by 5700 and 5800. How the market reacts there will tell us a lot. Sentiment's also hitting washed-out levels, hinting at a rebound. Last Friday, inverse ETF volume reached 50% of speculative ETF volume. 60% has a perfect one-year forward record. Bullish percent readings for major indexes like the NYSE, S&P 500, and NASDAQ are at 2022 lows, with some like NDX and XLK nearing 2020 or 2008 extremes. Catching the exact low in a downtrend is a fool's game. Instead, we look for a multi-step bottoming process, an oversold condition, a rally lasting more than a few days, a retest of the low with lighter selling pressure, and finally, a surge in buying demand. Think breadth thrusts. After the 5,500 break, selling hit hard with no breadth thrust cluster, so the process restarts. Post-rebound, watch for less intense selling on the retest. Monthly momentum via MACD implies that recessionary-type declines, 25 to 27% off the high, or 4608 to 4500, shouldn't be dismissed. That's the risk if this deepens. Our risk management tools are built for this, balancing exposure with discipline. Want to dive deeper? Schedule a call with us to explore how we navigate these swings. That's your Tech Talk update for April 8, 2025, written April 7. We're here to support you. Reach us at 800-594-7930 or dayhagan.com. Join us for the upcoming technical analysis with Art Huprich on April 23rd at 4 p.m. ET. Thanks for tuning in. Disclosure. The data and analysis herein are provided as is without warranty. Hagan Asset Management, DHAM, its affiliates, employees, or third-party providers aren't liable for losses from reliance on this. Opinions may change. Do your due diligence. DAM may hold positions in securities discussed and trade without notice. Securities may not suit all investors. Values fluctuate with rates or other factors. Investment advisory services via Donald L. Hagan, LLC, a SEC-registered firm. Accounts at Raymond James, NYSE, SIPC, and Charles Schwab, FINRA, SIPC. Day Hagan is a DBA of Donald L. Hagan, LLC. Day Hagan Asset Management 1000S, Tamiami Trail, Sarasota, FL 34236, toll. Free, 800-594-793. Office phone, 941-330-11702. Websites, dayhagan.com and dhfunds.com.